All right, let's talk about a home builder that's making just a wild bet. In a housing market where pretty much everyone else is slamming on the brakes, this one company has decided to just floor it. We're going to find out why.
And that really is the question, isn't it? The entire home building industry is pulling back, they're playing it safe with all this economic uncertainty. So why on earth would one company, Smith Douglas Homes, pick this exact moment to go for broke?
So to really get this, we gotta understand what the market looks like right now. It's filled with uncertainty, builders are seeing their profit margins get squeezed, and, homes are just getting harder for people to afford. For most builders, the reaction is pretty simple, and it's logical. You slow down, you protect your profits, and you wait out the storm.
And the difference here is it's stark. You've got the standard industry playbook on one hand, slow down new construction, sell off the homes you've already built, and protect those profit margins no matter what. And then you have Smith Douglas, doing the literal opposite, pushing for more volume, opening more communities, and making the pace of sales their #1 priority.
So this raises the million-dollar question, and this comes right from our source material. Is this some kind of brilliant discipline strategy where they see something nobody else does, or is it just pure, audacious recklessness? It's a huge gamble.
So what does this gamble actually look like out in the real world? Well, when you decide that sales volume is more important than short-term profit, there is an immediate and a very, very visible trade-off.
The numbers really do tell the story. Their home deliveries actually went up by 1%, which was a company record. I mean, that's incredible in this market. But look at the cost. Their profit margins took a major nosedive. This shows it was a conscious decision, right? They chose to sacrifice profit to keep the volume up.
And you can see just how big that hit was. Their gross margin dropped from 26.2% all the way down to 21.8%. That is a serious cut, and it's proof that they are absolutely willing to take some short-term pain to pull off their long-term strategy.
And look, this wasn't an accident. Here's the company's COO, Russ Stevendorf, basically saying it out loud. They believe it's better to keep homes moving, to prioritize what he calls absorption and inventory turns, than it is to try and squeeze every last drop of profit out of each house right now.
Okay, so why? Why would any company willingly choose to make less money on each house? The answer is fascinating, and it gets right to the heart of how they operate. It is all about protecting their production engine.
And there it is, the key, an assembly line. This is not your typical slow and steady home construction.
Nope. Smith Douglas has engineered their system to work like a super efficient manufacturing plant. They call it their flywheel, and it's a simple 3-part system built for pure momentum. You have consistent starts that feed the machine, which allows for super fast build times, which results in consistent completions. It just keeps spinning.
And how fast are we talking? Get this, their company-wide average build time was just 57 days. Let that sink in for a second. That is astonishingly fast, and it is absolute proof that their assembly line concept is working at an incredible pace.
And this brings us to the golden rule of any assembly line. It can't stop. The second you have workers standing around or inventory piling up, the whole system just grinds to a halt. For Smith Douglas, sales are the fuel. They have to keep selling homes to keep that entire engine running smoothly.
So that operational obsession explains how they're doing it. But to really get it, we need to look at who they're selling to and how they see the market cycle itself. Because they are playing a totally different game on a completely different timeline.
So let's think about their typical customer for a second. Smith Douglas focuses almost entirely on the entry-level home buyer. So when that family sits down at their kitchen table to make what is probably the biggest purchase of their lives, what's the one number that matters more than anything else? Now you might think it's the final sticker price on the house, but for this kind of buyer, that's actually not the most important thing.
It's this, the monthly payment. That's the kitchen table number. It's the real-world figure that tells them whether they can actually afford to live in that home. And this insight is exactly why Smith Douglas uses heavy incentives. It's not just about cutting the price. It's about getting that monthly payment down to a number their customer can say yes to.
Now, pushing this hard in a down market, it sounds incredibly risky, but they've actually built in some pretty smart guardrails. First, they focus on what's probably the most resilient part of the market, those entry-level buyers. Second, they see this downturn more as an affordability reset than some kind of crisis. They also use a land-light model, controlling lots with options instead of owning them outright.
And finally, they keep their debt unbelievably low.
So when does all this sacrifice, all this risk actually pay off? Well, it's not about this quarter or even this year. It's all about being patient and positioning themselves for whatever comes next.
You know, it really just boils down to two completely different philosophies. Most builders are playing the short game. They're focused on quarterly earnings, protecting today's margins. Smith Douglas, though, is playing the long game. They're focused on the entire housing cycle, and they're maintaining their volume now to set themselves up for massive growth later.
And here's the COO again, just laying out the end game perfectly. He says that when the market does improve, the companies that kept their volume going, the ones that kept investing, are the ones that end up with stronger margins and make more money over the entire cycle.
So ultimately, when you strip it all away, the entire strategy is one big bet that by keeping their production machine running, keeping the construction crews working through the downturn, they will have enormous leverage to capitalize on the recovery when it finally arrives.
Which leaves us with a final, fascinating question. In a market that's pretty much defined by hesitation, where everyone else is frozen, Smith Douglas is betting that the boldest, most winning strategy isn't to slow down or even to speed up, but simply to never stop moving. We'll just have to wait and see if this contrarian's gambit pays off.